So I've been using this last week's rally to sell into the market. I know that's not typical because I'm usually talking about buying and what I think you should buy. Stick around though, this should be the greatest video ever. I mean, you're going to get so tired of winning, you're not even going to want to win anymore. Should be a really good one today.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends. Happy Saturday. I hope everybody's doing well. I hope you had a great week in the markets. I had some fortunate moves, which was very lucky. I had picked up some Google before the earnings. I had picked up Amazon, which also had a good move, and I had picked up some Netflix. Now, as always, this is in my trading account. This is not, I have a set it and forget it account, but I actually may even make some alterations in there. And let me tell you why and what I think is going on. I don't think anything has changed just because we had a bit of a rally the past week. In fact, I think we'll continue to see a rally, if I were to be totally honest, until people get bullish again. And then I think we could reverse and go lower. Now, as I always say, this is not financial advice. You need to do your own research and you should not listen to me for any financial decisions you make. Please do your own research and reach out to a financial advisor for your decisions. My concern is all the things that the doom and gloomers have been talking about for the past 4 or 5 years is finally building up. I don't think it really has to do with the tariffs. I think the tariffs were the straw that broke the camel's back, or the match that could, like, anything you can think of to state that, but I'm not really sure that's what's causing the market correction. I think it's more that we were overvalued and we had run too far, and I think there could be more downside to come. I see the dollar moving, I see how gold is moving, and all the markets being in disarray tell you that there's some concern out there. And I think it's probably warranted. I do think businesses are beginning to slow down. And I think for me personally, it's time to rotate out of some of the things that maybe have some high valuations into some of those things that seem inexpensive. I still see a lot of things in the market that look really reasonably priced. And what I've been looking for is a nice dividend that's paying more than what a treasury's paying, that's using less than 60% of their cash flow to be able to pay that dividend, so that if we do slow down, it should be okay and they should be able to continue to pay those dividends. And I think I'm buying companies that are inexpensive enough that if the economy does well, they should do better also, and I should benefit from that. So it's a little bit of protection from being into the too expensive, high flying stocks. I also have a theory that as everybody has moved into these low index ETFs, which I think are great, by the way, if the market corrects and if it becomes a real panic where the average person who doesn't typically pay attention to the markets starts to sell, that's actually going to push the largest components of those things further to the downside than they necessarily should go. I mean, obviously, everything goes where it should go, but meaning they might get really inexpensive, creating a good opportunity to buy them down lower. Now, again, I don't know that this is going to happen. It's just kind of my theory to what's going on based on a few things that I looked at this week. And then even yesterday, I was looking at a house that's for sale that I know the seller really wants to get out. The realtor contacted me saying, hey, they really want to move out of this house. And I haven't bought real estate in a long time. And the reason is every time I look at it, the math doesn't really make sense to me. Now, I want to delineate, if somebody's looking at buying their primary residence, I really don't look at that as an investment. I mean, everything's an investment. Buying a pack of gum is an investment on some level. And buying a house is sort of in between when it's your primary. But I really suggest that somebody buys a house for other reasons than I hope it goes up in value. What I hope for when we buy a house is some security for my family and being in the area I want to be in, and not having to deal with any landlord potential issues. Meaning, landlords are typically people too, and they can have their ups and downs. They can get strained. They might have to sell the property. They might need to raise the rent. They might have all sorts of things that are out of my control as a renter. When it's my house, at least I'm in control of that. Now, I could have the same problems, but it's my house and the location I want to be in, potentially in the school districts I want to be in. If I want to paint the walls purple, it's my decision. I don't have to get approval or figure out who's paying for it or things of that nature. Like, those are the reasons I want to buy my primary home. But what I was talking about when I mentioned that I was looking at a property is I was looking at an investment property. Now, the house is listed for $375,000. When I did the math of putting 25% down on an investment property, it looked like the payment was around $2,000, $2,100 a month. That included, they had a pretty large HOA, and the taxes were actually pretty high for Vegas on that price of a home. So I'm looking at the house, and it looked like about a year or two ago they rented it out for $2,100 or $2,200 a month. And I'm guessing that the renter fell out and they're not renting it right now. That's why they're thinking of selling it. And from what I've seen, rents have softened. Now, I believe if I asked anybody, they would tell me it would easily still get that same amount in rent. But when I look at the property and I just in my head think, what would a home like that rent for? I'm not trying to overanalyze, just my own brain, and maybe I'm living in 1920 and the inflation just hasn't caught up with me and I'm too low. So to be fair to the analysis, it's possible that my number is too low. But I'm looking at the property thinking, geez, I think that thing on a good day should get, 1,800, more likely 1,700 a month in rent. And then when I start doing the math, I can't believe how far off I am from where the price of the house is. I mean, I'm under, and I mean significantly under, $300,000 for what I would be interested in that house. Now, maybe it never gets there, but I don't have to buy one, so there's no, urgent, oh, I need to get this thing. And when I think about it at the price it's at now, even if I'm generous where the rent is, it's lucky to be getting 3% return if somebody were paying in cash, along with all the headaches of having a rental. Nothing against that. I have a rental. I don't, whatever people want to invest in, that's great. But I just started thinking about where the housing market still is and the price of the stocks in terms of their earning. And I think there could be room for them to come down. I don't see any big, massive problems other than I think we could see higher unemployment as companies start to see their earnings dwindle. They're going to look at ways they could try to stop that from happening. But overall, the economy seems to be just fine. I think some of the assets have just gotten further than they should be. My guess is it's the same in the stock market and potentially the same in some collectibles and some other things that have had a real run up. I think people are getting stretched. I think as we see the continued inflation, whether it's from the tariffs or whether it's just continued inflation, that's going to cause things to slow down a little bit more. Um, I still see great opportunity though, and when I look at, I'll give a few stocks in particular. T. Rowe Price, ticker TROW. Great dividend, using less than 60% of the cash flow to be able to pay over a 5% dividend. You have similar with Prudential, ticker PRU. Excellent dividend, less than 60% of their cash flow to be able to pay that dividend, also over 5% yield. Target, which I've been banging my hands against the table on, not only are they using around 50% of their cash flow to pay the dividend, which, it went up a little bit, not the dividend, the stock price this week. So I think it's, just below 5%. If I remember correctly, it's like a 4.7% yield. They're using just over 50% of their cash flow, and their earnings are killer. Their price to earnings ratio is really low, which to me indicates that even if they have a bit of a slowdown with the economy, that they'll be able to pay that dividend and they'll still do real well in terms of their valuation. And if the economy does well, that's one that I see that could really have some explosive upside. Now, not financial advice. Again, I don't want anybody copying me. If it doesn't work out, I feel terrible about that stuff. But Target's a company I really love, which those of you who watch the channel are well aware. And I even saw that Archer Daniel Midland looked okay. Um, Whirlpool reported their earnings and they were better than expected, and I see a little bit more safety in that dividend. They also said that the tariffs weren't hurting them as much as they thought, which is phenomenal, obviously. So I think there's some real potential on there. Right now, their yield is over 8%. I'm not sure if they'll have to cut the dividend. Generally, that's a sign of there's some internal problems. So I'm not as comfortable that they'll be able to continue to pay it going forward. But in the meantime, they seem just fine. They seemed excited about the earnings, which gives me hope that they might not need to cut the dividend, and there's some room there as well. And then the other one I've been looking at, which I don't really see as a bargain in terms of the industry and the price valuation, but I really like Verizon paying over a 6% dividend, also using a small percentage of their cash flow to be able to make that payment, which makes me comfortable with the payment. The other thing I like about Verizon is if the economy slows, I think it takes a lot for people to get rid of their phones and their phone plans. Most people live on it. It's their communication, it's not just a phone anymore. It's entertainment, it's all sorts of things. So I think even if we have a slowdown, people beg, borrow, and steal to try to keep their phone plans I'm getting a brain fart, forgive me, but to keep it in place so that I think that dividend's safe, and I don't think they're going to have a huge decrease of customers or anything else. And if we have some inflation, maybe they need to bump the price up a little bit to be able to sustain the growth and continue to pay out and everything else. But I like Verizon as well. So those were, I think, five or maybe six stocks that I still see as good valuation, no matter what happens with the economy. The one thing to be careful about, depending on your goal with your investments, if you're listening to things that I talk about, is if the economy continues to boom and if we continue forward, they will probably underperform some of the things that have been outperforming previously. I mean, a company like Netflix that was booming, or Amazon, or Google, or Nvidia, or the others, odds are if the economy just continues to go, that those will outperform as well. So as I'm transitioning to these things, part of it is recognition when the stock market corrected that, maybe I had to reallocate better. I waited because I am a little bit stubborn, but that hasn't really changed. So now that the market's rallied a bit, I see it as an opportunity to be able to transition at better prices and move into some of those companies that probably have you know, say a better safety score in my world. I'm not talking. I know one website does something like that. The interesting thing is, if I look at the chart and I just analyze on a technical level, to be fair, that was a great pullback and a retest of the low, and stocks seem to be going higher. So I really could see a scenario where the market just goes right back up and actually makes a lot of sense to the upside as well. It's also why I say don't listen to me and do your own research. You have to make your own decisions on this. But we made a nice low. We retested it. We breached it by a tiny bit on a lot of the stocks. So anybody who was using those numbers as like their stop loss area and areas to get nervous at, they might have gotten out of the stocks. The sellers do seem exhausted. It doesn't seem like there's a whole lot of selling pressure. So I think what happens is the market continues to drift higher until something comes out that causes some selling pressure. And it's more that there's a lot of possibilities of where that comes from. I don't think we've figured out what's going on with the tariffs with China. I think that's our biggest issue. I think it's not really in the news, which is great for the stocks going up. But there, I think we're in a really tough position where we would have to be the ones to back off. I just don't see China making any change to their policy. I think if we tried to go the other direction, they would just raise tariffs even higher. I think that we've insulted them in their culture and the way that they do business and things, and they would rather go into a huge recession than be insulted. Like that's the personality. It's been that way forever. I don't really see that changing. it jeopardizes them going into a huge recession, but I think that that's secondary. It's not their main objective. Where our main objective is trying to fix these things and everything else. It's just different philosophies on how they handle things. I'm not sure that our administration is one to back down either. And I think that in order to actually have conversations with China, we probably have to bring those tariffs down and then sit down and have a conversation and see if there's any room for negotiation, which there may not be. So I think that's going to be a really tough thing to get past. Um, but it's hard to predict what it is that could be in the news that they point to that causes a recession, or even though that's not really what causes it. It's a whole amalgam, or it's a whole bunch of things that all come together after something's just run too far. And I think maybe we've run a little too far. Now, I hate that I hear myself and I sound like one of those gloom and doomers because I'm really not. And my ultimate goal is to get people to save and put away for the future. What I've been doing is I've been buying 3 month CDs, and I figure I'll just continue to roll them as the economy figures out what it's doing and make decisions as that happens, um, and maybe reinvest them when the time comes up. But I would still want to see people putting away and saving. I'd rather you invest in something that falls in half. Let's say the economy does correct, there's a big recession. I would rather you buy a stock or a house or a this or a that, and watch that fall in half than go, on vacation, buy a car, spend the money at dinners, and have nothing to show in the end. Now, don't get me wrong, we all have to live our lives. I want to see people enjoy what they make at work and their family and their life as well. I just hope people save for the future because I don't really think Social Security is enough to survive on. And I think getting to the point where your body gets tired and you're having difficulty working and you want to have time to, you know, spend with your family, that it's good to be in the position where you have the finances to be able to help that stuff so you can do those things. I don't know if any of you watch the videos that Gen X Dividend Investor does, but I really like his channel, and it kind of creates a goal of where I want to be. Other than uh, his income would be, I hate to admit because it's a good income, but his income coming from the dividends would be a tight squeeze, especially by the time I factor healthcare and some insurances and some other things to the mix. But that being said, what he's done is he started investing about 30 years ago. He's gotten to the point that his dividends were more than his income. So he's decided to retire at a nice young age. I mean, he's not a kid, but not, probably around the same age as I am, which your body still feels okay. If you want to go on vacation, you can handle it. I do worry as I get older that it would be tough to go on a 10-hour plane to go across the continents and visit Asia or go to Europe. Whereas, it just, your back starts to hurt, your legs start to hurt. Things change as you get older that you don't really think about when you're younger. That being said, it was really cool watching his video today because there's some things, like for me personally, that if I try not to work too much, I get a little too bored, but I recognize his point that you probably get used to that and it becomes nice because you become in control of your own decisions. And he doesn't have the stresses of work. And I'm sure, like me, he probably enjoyed performing and felt proud of himself at work, but it also can be super stressful at times. So it's nice to not have that on his back. But what he would talk about is that he finds himself playing more, multiplayer video games with some of his old friends. So he's probably having more fun for his social life. I'm guessing maybe he goes out and meets one of them for lunch once in a while. He gets to go on walks, whether it's with himself or with his wife, and choose to do that stuff. Gets to spend more time with his kids, which I can tell you, like, that time is invaluable. And I really enjoy being with my son and hope to spend as much time as possible with him. I tend to wake up in the mornings. I make his breakfast. I bring him to school. I'll pick him up when he's going home. And not everybody gets to do that. I choose to do that. And I really make it a priority because I think we have such a short time on this planet that that's the stuff that's really valuable. I think the investing is valuable because it gives you the ability to be able to make those choices and do those things. If I wasn't lucky enough to start when I was really young, I mean, the first job I had, I was putting as much of the money into savings and not necessarily retirement. I don't think I was thinking that way, but even if it was just into a checking account, a savings account, a CD, or something, like if I didn't know some of the other products, just to continually be putting away is what gets you to the point where you could end up like Gen X dividend investor, where you can live off the dividends. Now, I don't think I've quite gotten to that place, but I am starting to try to transition to them because as the dividend yields have improved, in my mind, it gets you a little bit closer and creates these opportunities. And I don't know if those stocks will continue to go lower where the yields will continue to get better. And if they do, I know it'll look scary, but that's where we need to look at the data and look at the numbers and make sure they're making enough income to be able to continue to pay those dividends and try to pick companies that seem pretty safe. Or if you're concerned, or if I'm concerned, you can put it in CDs similar to what I've done. But I really use the CDs as just a holding spot to be able to invest it when I'm ready to invest it. I'm curious what you guys think. I mean, do you see us having a continued down move on the stocks and potentially the housing market? Like, really, tell me in the comments if you've made it this far. I'd be curious what others think, where you think the economy is going. Do you think we'll just continue to boom, or do you think we actually have a recession for some time? I mean, people have been talking about it for years. Um, I didn't really see it. I think maybe just the correction for the stock market may have brought it to my attention a little bit more, because still, if I go out to dinner, if I go places, they're doing quite well and they're extremely busy. It's more that when I talk to friends and people I know, they talk about how stretched people are in their lives or they're stretched. But again, I don't know if that's just complaining because none of us like inflation. Like, again, I don't like it either. I think the policies that are being put in place could actually cause some hyperinflation, and the Fed gets stuck in a position where they'd be forced to raise rates if that starts to happen. But I don't think that's really going to happen either, because I think if we have tariffs go through, you'll see a one time move up in prices because of it. And if things continue to move up from there, that's just that they're using that as an excuse. If there's a new 10% tax, for sake of argument, put on goods, well, that should only happen one time. If the prices continue to go higher, that has nothing to do with that original additional tax. That has to do with other costs and things for a company to feel the need to raise a price. The reality is, this could just be the usual climbing the wall of worry, or however we think of the markets that consistently go up through times that seem a little bit scary. So, I don't know. I'm not sure what I think. What I can tell you is when I look at prices of things, they seem overvalued for what I see as their intrinsic value. The house is a great example. I may have overanalyzed for you guys to kind of prove the point or share the point. And maybe that's just Vegas centric. Other parts of the country are having corrections, and some parts of the country, in my mind, similar to the stock market, seem pretty reasonably priced. When I look at cities like, I haven't looked in a while. Like, I really should go on Zillow or Redfin or some of the others and take a better look and do the math. But when I was looking at I think I was looking at Pittsburgh, Cincinnati, Cleveland, and somewhere, I don't remember if it was Alabama or what, but they were all reasonably priced. You could still get a decent rent for the price of the homes. The incomes and the jobs available for the salaries in terms of rents and everything else were all in good line. Like, I'm guessing, just like the stock market, if you do your due diligence and search around and find things that are still of value, that it does exist. I don't think the internet has changed all of that, but I do think people might have gotten a little overextended, and it's possible they'll find themselves in a position where they need to reallocate and adjust and make some changes. And I'm not sure what would bring the houses to the market, because I still think people have good equity in it, and a lot of them have good loans with low interest rates. But it's possible it's just taken the last 2 or 3 years where we've had elevated interest rates, and maybe houses haven't gone up quite as quickly, so that if there's a bump in the road, it'll really shake out the newer buyers. But somebody who bought 4 or 5 years ago that has an interest rate of 4% or below and a low payment overall, I'm not really sure what I see that brings a lot of those homes to the market. In fact, the other part that I worry about is if we had a correction in housing, that the government will come to the rescue and in some shape or form use what they learned in COVID, which is give some forgiveness, allow people to not make their payments. And I think that keeps the housing market overinflated because if you don't allow people to fail, it's the people who fail who create the opportunity for the younger generation to be able to come in and pick something up at a bargain price. I do feel terrible for the people who fail or have trouble and overextend, but I don't know that it's the government's responsibility to protect them because they're worried that'll hurt the economy. I understand protecting the banks because we need them in place for all of us and as a society, but I'm not sure how I feel about the homeowners because there's good and bad to both sides. And the ebb and flow of those markets, again, is what creates the opportunity for the next generation to be able to pick something up at a valuable, at an inexpensive price so that they can have it for their families and whatever else. Just my thoughts on it. Anyway, again, if I no, I haven't said it already. Do me a favor if you haven't already, hit that subscribe button, smash the like button, make some comments in the comment section. Let me know what you guys think about the economy. Let me know if there are any stocks that you see as a bargain here, or if you think that they're way overpriced, and which ones you think are the most overpriced. I'd love to hear from you. Have a great weekend. Oh, the other reason I did a video now is I'm headed out for the weekend, so I don't even think I'm going to bring the well, it's my phone, but I don't think I'm going to bring the little microphone and stuff. I'm just going to head out and spend some time with the family. Have a good weekend. Oh, don't take that the wrong way, though. I will have my phone, obviously, so if you make a comment, I'll respond, I'll say hello. So by all means, make your comments, say hello, let me know what you think about the markets. Have a good day.